Hello traders, Nick Shaheen here looking at Nike 3.5 today, March 5th, and wow, I keep starting these videos with wow, another crazy day. Crazy because this week we've moved up or down every day in alternating fashion 3.5 to 4.5%. That is not normal. However, if you think about it, it's kind of expected because the VIX is over 30, almost 40. I don't remember where it closed today. But anyway, so on this day, Nike is down 3.5%, but it's in line with the market. That's how much the market was down after an up 4% yesterday out of nowhere. So all these swings are just a representation of the level of nervousness. So obviously we were reeling from many things, but I think it's the combination of all-time highs. At the same time, we have elections coming, and people talk about it. At the same time, we had the coronavirus, but really was it? Because we rallied to new highs for over a month after the coronavirus showed up, with a kill rate of 2% in China at first. So you can call it what you want. It's imagination running wild, and the leaders of this world not explaining things and reacting and shutting down schools and cities, countries, and the media frenzy. I mean, today the guy on CNBC was screaming at the top of his, like, the Dow closed 1,000 points lower. Like, okay, so it closed 1,000 points higher yesterday. Just ignore the noise. Use logic. Okay, let's use logic. Nike's been around for 40 years, I think, as a public company. So they've seen their ups and downs, and they clearly survived all problems. This is the stock chart. What is this? Okay, so this is the Nike chart on a monthly basis. Every candle is 1 month. Clearly, you did not lose money if you invested in Nike for the long term. Nothing here, by the way, is a buy or sell recommendation. I will share trades with members, but you can join us. There's a link down below in the description. The concept is the same. Logic, okay, people? So I'm going to go back to a daily chart, about a year's worth of data. So it's seen its fair share of, oh my God, moments, and they lived through it. Most recently, they had the stupid national anthem NFL debacle, and they challenged the world. Everybody spit in their face, and guess what? They emerged victorious out of that one too. Management has proven it deserved the benefit of the doubt. Love them or hate them. They're going to sell shoes. People are going to want their shoes. Now, I have to say that shutting down China for 3 months or 4 months is going to probably affect their income and their supply chain. So there will be a few periods of difficult times, but I'm pretty sure they can navigate through it. So they will, I don't know if they have or haven't, do a pre-announcement of sorts, like Visa and MasterCard said, oh, our sales are going to be down. Well, duh. Yeah. So that's why they sold it down 20% roughly, and then bounced about eyeball half of it. So they're now, this is the last tick. I expanded this red zone. It was only for this cluster here. At this time, I said, Nike is too tight. Something is coming. I drew 2 scenarios, and the upside scenario played out. So what I just did, literally before I started this video, I expanded this red zone out this way and that way. I did not change the width of it. And look where we are, right in the middle of it. Why did I do that? Because of this point right here. It was clearly pivotal on this earnings report. They said, you know what? We got this wrong. Let's go. They came back and tested the neckline, and then they bounced. Now, this week, they fell through the neckline, but it's important to note something about volume profile, and I will in a second. Still talking about this neckline. It was a huge roof before. Huge. Once, twice. Was it 3 times? You could say that one. So let's go back to 1 year. Okay, so huge roof. 3 times, twice, maybe 3, and then boom, support. I would almost consider it support, even though it's been rattled, but look at this cluster right here. It came back almost to it. So what else is supportive? First of all, it's not that cheap. It's like 33 PE, but you don't always want cheap. And I don't track their PE for over a long period of time, so I don't know if that's high relative to them or not. but it's not crazy expensive, especially that it only sells at 3.8 times sales. So if they're growing their sales consistently and they're only selling at 3.5 times its sales, 3.8 times its sales, it's cheaper than Apple from that perspective. It's almost, let me put it this way, it's almost as cheap as Amazon. What are you guys screaming? Well, Amazon sells at like 3.3%, 3.3 times sales, 3.4, something like that, going from memory. So it's a little more expensive than Amazon from that perspective, but it's not crazy expensive. So valuation is not going to be a selling point or providing support. It could get cheaper is what I'm trying to say. So it's not a reason for it to hit a floor on it. However, the volume profile tells me that this line, this orange line, is the mathematical value where most of the buying and selling happens for the last year. So for some reason, people love to buy it and sell it here. So there we are, here. So if it's falling and people are buying and selling it more often than anywhere else, so it's going to hit the brakes. It'll be falling, the sellers are overwhelming buyers, and then here everybody starts acting. Boom, 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 boom. Congestion. What if this fails? This line is just a hair smaller than this as far as busyness in volume. How do I know this? It's from the volume profile chart. Different video. So also this zone here is a cluster of support once, twice. So I have one line of support, this neckline, where it's at right now. Another line of support, which is the point of control. Another kind of point of control. I mean, like it's a hair smaller, so it's like almost 2 points of controls. And a cluster of support. So any which way you slice it, I think it will take huge bad news for us to slice through all these. Technically, I can see it happening if like an inverse head and shoulders, an inverse cup and handle or a loosely interpreted head and shoulders. This candle here kind of whacks the neckline out, because if it bounces and it loses this, it should fall to here. But this is a zone that's supported. So is that a perfect bottom? No. And if you're picking perfect bottom, you're going to get stinky fingers. So I wouldn't do it. That was gross. But anyway, that shouldn't be the goal. It should be, let's find a place where over the long term I can make some money. How else can I use entry points with buffer? How about using options? Can I tell you that I can go long today, get paid for it, no money out of pocket, and have a 30% buffer zone using options? Just get long Nike today, no money out of pocket, get paid for going long, and 30% buffer, up to 30%. It could be 20, 15, depends on my risk appetite. If I'm really ballsy and I want to own the shares at certain levels, I can do it. So anyway, I'll leave you with this teaser. Down below, first, before I forget, sometime in a little bit, it's going to be pop up on the left. Subscribe to this channel, is free. But if you want to join the chat and discuss this and other tickers all day, every day, and get the details on trades like these, down in the description, real easy, totally reasonable, down to earth people. It's totally worth it. Nick signing out.